Hey, good morning, everybody. So this is going to be the watch list for Tuesday, January 21st. And it's a Tuesday because Monday the markets are closed for the Martin Luther King holiday, which is also the presidential inauguration. And then on Tuesday, we have nothing scheduled on the economic news. It's really a light week. Definitely keep an eye on the U.S. leading economic indicator at 10 a.m. So that's just 30 minutes after the market opens. We'll want to definitely be cognizant of jobless claims on Thursday, and then home sales, consumer sentiment, and then overall PMI. Now, I would not underestimate the exuberance in the market going into next week. So one of the telltale signs from my perspective, and I did a LinkedIn post about this saying that, the two asset classes which are going to be game on for the markets this year under a Trump presidency is going to be technology and is going to be banks. So why those two? Well, first and foremost, let's talk about the banks. So the one thing that we know about capitalism is that more money is made when rates are lower. So there's going to be a ton of attention on the Fed, the FOMC, trying to get rate cuts in play. Trump believes that the FOMC should report directly to him and not be a freestanding government entity that doesn't take any direction from the president. So I think there's going to be a lot of noise with regard to politics and business. And the one thing that they are going to try to do is to drive down interest rates, even if inflation is higher. I don't, a rising tide raises all boats. So I think the premise is just keep spending, grow the economy, and everything else will take care of itself. So right now, nobody cares about the federal deficit. Again, the government just keeps printing money like no man's land, and everything is good probably until it's not. So I think banks are definitely going to be in play. There'll be a ton of regulation pullback. They're also talking with banks in reducing their capital levels. Our banks are so overcapitalized, and capital is one of the greatest expenses to a bank. So capital is shares issued that are retained earnings, or retained capital, right? Or earnings that they then turn into not being dispersed in a dividend, but they're held on the bank's balance sheet in case of a liquidity crisis. And liquidity crisis is really deposits, has nothing to do with capital, and that's where everything went amiss when Silicon Valley Bank collapsed. They had a ton of capital. They were very well capitalized. But what happened is all the depositors took out their money. And at the end of the day, a bank's balance sheet has to balance, just like any other business. So deposits have to equal loans. Assets have to equal liabilities at the higher scale. So if they reduce the capital structure of banks through Basel III, it will take all that capital on the bank's books, and it will then turn into dividends. It will turn into share buybacks. It will turn into a flood of liquidity going back into the market, which will make the banks even more profitable. So banks right now have a ceiling from an earnings perspective because of the regulatory environment. Well, if Trump comes in and basically 86s that entire regulatory environment and say this is, overkill, we're going to make it easier, then definitely the banks are there to, keep an eye on. And I'm going to run through some of the banks this morning. The second thing, obviously technology. There is a reason that the CEOs from Apple, Amazon, Tesla, Meta, Google are all going to be sitting sidecar at the inauguration. I mean, that has never, ever, ever happened in history. But what they are watching is how much power in, say, that Elon Musk is getting with Trump's ear, that they don't want to miss out on this. So clearly, when you have the biggest Mag 7 tech CEOs showing up at a presidential inauguration, you can't just dismiss that, right? There's a reason they're all there, and they're all there to personally benefit, not only for themselves, but for their own corporations. Now, one other huge piece of news that hit basically 48 hours ago was Trump launched his own meme coin. I mean, it started at 55 cents, and I think last it's up to 60 some dollars. But here's the crazy part. There is already $61 billion of market cap in that meme coin. So, while I am not a fan of meme coins, I am not a fan of cryptocurrency for a myriad of reasons. It doesn't mean that this administration isn't going to latch onto them and turn that into wildfire. Now, mind you, that could be very, very dangerous because you'll clearly have an opportunity for a rug pull. So when you're looking at a lot of these coins and a lot of these meme coins or cryptocurrency, it's a very narrow concentration of ownership. So even with Trump's meme coin, the top inside holders own over 90% of the coin. So with that being the case, if you think about it, if they cash in, what happens to the coin? It literally could go to zero. Okay? So it's just, it's crazy times. So you have to learn how to play momentum. The market cap of that meme coin right now is $65.3 billion. And in the past 24 hours, the volume has been 19.2 billion going into it. There's 768,000 holders. And it's literally been insane. But that's what this market is chasing right now is speculation. So you could sit here and argue logistics, why it should happen or it shouldn't happen, but at the end of the day, it doesn't really matter. So do what I do and just learn how to ride the coattails of some of the most wealthy people in this country. Again, you don't have to agree with them. You don't have to believe in their beliefs. But what you cannot do is you cannot fight liquidity. You can't. You will lose 100% of the time, which is why I always say trade the trend. Okay, let's take a look at some of the charts. So I do all of my charting, again, on the daily 4 hour and 1 hour. If you do this, I know some of you do different colors for different time frames. For me, I'm very simple. I keep them all the same, and I just watch how price reacts. Now, a couple of things I do have are my blue lines. So my blue lines I'm going to call our interim levels, which are usually on a 15-minute. I never chart the 15-minute unless I am stuck between levels, okay? Just to kind of give it a little bit of brevity and understanding as to, well, what might happen between these levels? The other thing you can do too is you could use a Fibonacci retracement. But for me, you can see back here on Monday, January 6th, we touched the level. Here again, we touched the level, we rejected the level, and then what are we doing on the market? Pre-market open is we're coming back to that level. But I don't want to go long until, for me, or reject until I really get above my solid levels. Now, it doesn't mean that you can't take a trade at the interim levels, right? I mean, this would be another one right here that you might want to watch in QQQ, which is about this 525.40 level, where, again, we are between levels, and now I got a couple of interims where we're just keeping an eye on what's happening at these areas of interest, okay? So my solid level to go long is above 523. This was a very solid level, 523.52, 523.64. It was held, it was respected for so many points in time in the past, and you could see what happened on Friday is they pushed up to it pre-market, pushed down to my level of 519. They pushed right back up to it. Then they pushed down. So we have to break above this to really get some momentum to go back up to 530. So let's take a look at SPY. Same thing here. We're just kind of bouncing back and forth between levels. I did pop in an interim level this morning, which you can see was this pivot high here before they sold it off. But they're down here, they get to the level, they break the level, they go to the next level, they come back, they used it as support, they failed the level, they go back down to the level, they push back up to the level, so on and so forth before we really corrected to the downside. Now, mind you, from the presidential election till now, the market gave up all of its gains. So it was up significantly, and we are right back to where we were at the presidential election timeframe, which was back here in November. Okay, so the market is trading back to where we were at in November. It came down, it ran all the way up, and then it comes down again. So my 4 hour, 1 hour, and daily levels, again, are in yellow. I have this interim level just to see what's going to happen. Now, the market's closed on Monday. So with the inauguration on Monday, if you come into Tuesday and things are already rocketing, again, like I shared on Friday, wait for a pullback. Wait for a pullback to then go long in your entry, but do not chase. So, as a reminder, you never want to take calls on a green candle. You never want to take puts on a red candle, if you can help it. Why? Because when the candles are exploding to the upside or plummeting to the downside, implied volatility is going up exponentially, and therefore so is gamma. And as you recall in my class, gamma drives the delta. And the delta is what gets added to or subtracted from your options price. So again, what we would love to do is we want to buy puts when the market pops higher. So here's a great example. If you thought the market was going to come down, you want to buy puts on this green candle, write it down. If you want to buy calls, you want to buy your calls on the drop and then get in and ride the wave higher. So we will use that in conjunction with supply and demand. You can see we have a fair amount of sellers up here on SPY. Same thing with QQQ. But again, what's going to be important is what the narrative is at the inauguration. Who's present? How does the market respond to the overall commentary? So let's get into some individual names. I'm going to stick with the tech stocks because I think they're going to be a huge driver. Here's a great one with Apple. You can literally see how we bounced off the level. They couldn't hold it. They came down to the next level. They pushed it up. We're bouncing. We get back up here, and then we fail level 1, level 2, down to level 3, almost pushed down to level 4 before they pushed it higher. So Apple, I think, is a bias to the downside. Not that it can't go higher, but I'd be watching this 230.16 for if it gets any weakness to actually head lower. There was some negative news, I believe, on China with overall delivery was way less than what was to be expected, and therefore it created this huge sell-off. And then Apple was trading at such a ridiculous premium, and you could kind of see it all the way up here, where it was at almost 260. Now we're down here to 230, 10% haircut. Is that a buying opportunity? Maybe, but I think you have to wait and see if we pick up some strength to recover to the upside. Let's take a look at Amazon. Amazon's going to be at another interesting reflection point. I would love for Amazon to pull back to this 225.18 to go long. Now we're between levels 225 and 230. When you're trading Amazon, there is, no 225, 226, 227, 228 call. They're usually wider apart because they're so expensive. But if Amazon can pull back to 225, my first price target would be 228.76, which you can see we've rejected it here, and here. We get above that, I think we go to 230. We get above 230, then I think you go back to these all-time highs. So we are clearly making progress back on Amazon. Again, I'd like to see a bit of a pullback. Let's take a look at Tesla. Tesla clearly, again, an interim level that was here from back on Friday, December 27th. Was held very heavily. So Tesla was up 6% on Friday, 6 and change, and then right before the market closed, it sold off pretty heavily. So this is why it's important, to make sure you have all of your levels on your charts. Because if you're just trading level to level, you just want to see how is price responding when it gets to my level. Again, I would use supply and demand to say, am I in supply? Am I in demand? I personally don't like taking calls where we have sellers, and I don't like taking puts where we have buyers. I mean, it's just not as reliable. You can do it and succeed, but your probability goes down. And look at what we did. We went right up to that 439.33. They couldn't hold it, and then they sold it off. Where'd they sell it back to? The 427 and change level. So Tesla needs to hold this. If we don't hold this, then I think we go back down here to that 400 level. Let's take a look at Meta. Meta is interesting. So Meta, I probably would not trade. I say I wouldn't trade this one because this is all dependent upon TikTok. So clearly, you should probably are all aware that TikTok is now banned in the United States. The app is no longer working. But Trump says that he's going to give it a 90-day extension. So if his first day in office, he lets TikTok have a 90-day window to find a buyer, and there are plenty of buyers that are lined up for this already. One of them is Mr. Beast, that some of you are probably following on social media. He's putting in an offer for it. Kevin O'Leary from the Shark Tank is got a group of investors that he's putting in an offer for it. So there is a huge amount of demand for somebody to buy this thing, but they have to be willing to sell. So I would say with this one, if they give it the extension, we're probably going to be coming back down here to 590. But this thing is just purely trading off of what do they think is going to happen with TikTok. Now, mind you, Zuckerberg, who was not a fan of Trump, who banned him from the Facebook and Instagram platform during his last administration, has clearly reinstated him, and then has also been down to Mar-a-Lago and is showing up at the inauguration. So call it whatever you want. But again, these guys are not cozying up to the next president of the United States for their health. Okay? So just follow what the overall market momentum is doing and go ahead and ride that. The next one let's take a look at is going to be NVIDIA. NVIDIA's been struggling, and as have all the chips. So this one, a lot of people got burned when they were chasing it at over $150 a share, all the way up here, thinking that it was going to 160, 170, 200, and then it just really corrected itself all the way down here to 130. So again, you're getting a nice 10% haircut, if not more, and now we're just trading within this range. So it really didn't give us much on Friday. So if you want to trade NVIDIA, I think there's a lot of opportunity, but you need to get above the 138, and then your next price target would be 139. Get above 139, and we're going to 141. Again, we're in some demand, but what I don't like when I see this is we also have a lot of sellers. And again, it's greed and fear. So we have short-term greed, long-term fear, right? Because the sellers are at the 1 hour, the 1 day, the 30-minute. The buyers are at the 45-minute and the 1 hour. So you can trade these stocks, but you have to be doing it with some added intelligence, like what you see here with real-time supply and demand. Let's take a look at some of the bank stocks. They were obviously huge winners. Citibank, this one, there is no resistance above it. It is just pure buy, buy, buy. We need it to get above $80, which will be its previous all-time high in order to go long. So this is not one that I would be chasing. Would love to have seen it come back down to 72. Now, I do, for all transparency, still have a small position in this one that I will, again, be taking off at $80. I just let a couple runners run just to see what would happen on this. But this will be heavy resistance at $80.70. So you could get a pullback and an opportunity to short that with some puts. Now, the other thing I will tell you, though, is with bank stocks, the spreads are very wide. So you can be getting into these. And again, remember, you sell the bid, you buy the ask. So you bought it, and then when you go to sell, there might not always be a lot of buyers to take you out of these. So these, for me, are longer-term trades. They typically end up being swing trades on momentum. So right now we're taking a look at Wells Fargo. Wells has a lot of gaps below to the downside on the daily. So again, I only chart my gaps on the daily. And then what I would be watching this one too is, again, possible resistance, somewhere up here around this $78 to $80 range. I don't necessarily want to go to the candle high. I want one, 2 touch points where I at least have some consistency. It'd be even safer if you probably moved right about here, which is where the stock is trading, to say, can it hold in order for you to get a bit of a pop higher? But again, would not be chasing this at this point in time. JP Morgan, same thing. It's trading at its all-time high level. My buy point was 247.30. You got that off of earnings on an earnings pullback, and it literally has taken off from there. So not something I would chase. Again, if we could come back down, so be it. Where would I short it? I wouldn't, because I have No knowledge of how high this might want to go. You could get a potential small pullback right here to 256.90 to maybe go long. But again, you have to be careful with bank stocks because there's not a ton of liquidity. One of the other ones that you might have seen that I posted on was US Bank. Every bank stock was just ripping higher, and US Bank sold off over 7% intraday on okay earnings, but their non-interest expense was through the roof, and non-interest expense can be controlled, and it's usually controlled in the form of salaries. This one had a price target upgrade back up to $60 some. This one, I believe you are fine with actually acquiring shares. Okay, so this would be a just buy and hold the shares with a price movement back above 50 into the 60 range. If we look at this on a daily time frame, you can see we are nowhere near the all-time high in this stock, where Wells is, all-time high, Chase trading at highs, Bank of America trading at highs, Citi at highs. This one is not. So this one could get you some good momentum to the upside. Where would I stop out of it if I closed below 47.14? So keep this on your radar. Again, this would be a equity play. Probably wouldn't trade the options in it. Or if you do, you're going to have to give yourself a bit of time. And if we can get momentum in the banks in general and you get above the gap fill box, then I think you'll be okay. The other wild card one that I've talked about in the past too is SoFi. So SoFi on this one, we had a pivot high, a pivot low. I did a fib level. They held the fib level. And then once you get above the 50, the 618 is your next potential reject. I'm going to go on a lower time frame here. And you'll note that they really didn't do that. And now we're holding the 50. We're holding the 618, okay? And now they've already approached the 786. So the next stop is generally the pivot high, where we sold off from. So at the time, it's back up here at about $17 a share. This one, again, lots of volatility. What I don't like that's coming up is going to be earnings. But I think you can get a marginal run up into earnings again on strength. Now, mind you, this stock at one point in time, is trading all the way up here at $24. So we are still significantly off, 40% from the all-time high. So it's clearly found some stabilization. It's found a base. We got the MACD that looks like it's just starting to turn on the daily. So if you can hold $16.42, which is the 786 fib from, again, this pivot high down here, I think you can go long with a price target back at the pivot, okay, which is going to be 17.19. You get above 17.19, and then I think they'll start to chase these upper numbers, but a lot of it is going to be dependent upon earnings. So earnings is going to be on Monday the 27th, so you still have a full week. But if you want to try to play this one, I would be buying the options expiration one set maybe before earnings, okay, in case they just run it up into earnings, and then leave some lottos after earnings. But all in all, it's a very volatile stock, but it's something to consider. So other than that, that's just kind of what I'm watching. Again, it's going to be a shortened week. So what happens on Monday, again, at the inauguration, news events, things that however well it goes or it doesn't go is going to be a telltale sign for the market come Tuesday. So I know this was a little bit longer than normal, but it's just kind of want you to understand what I'm watching and what I'm thinking. And then, again, be patient. You don't have to take a trade. And I think that's the greatest misnomer that most traders have, thinking that I got to come to the market every day and make money. You don't. So if you make really good money one day, then the next few days, just sit and watch. Be picky. You have the ability to look at 1,000 trades. Unlike a baseball player, only has so many pitches he can look at before either he gets walked or he strikes out. The name of the game in trading is look at as many pitches as you like. There's no cost to it other than time. But if it's done correctly, it will pay you handsomely beyond anything that you ever imagined. So with that, everybody, have a fantastic Martin Luther King holiday for those of you here in the U.S., And for the rest of you around the world, we will see you Tuesday morning. With that, take care.